Welcome, ADK and Financial Planning World Community, coming to you from the ADK lobby instead of the office for our July 2023 market update. As we approach the end of July, there are really no new themes or trends that I would shine light on. I would reiterate, if you go back to the May 2023 market update, I made a couple key points that I would like to just reiterate. One is that the stock market would be fully recovered probably sometime, call it end of this calendar year to mid next year. Probably in investing is a big chasm of what happens and doesn't because of all the risks involved. But right now the S&P 500's call it 3 to 4% off of its high. NASDAQ's called a little bit more than 6% off its high. So very doable that those would happen barring some kind of a disaster. The bond market, that's a whole nother story. As I said in the May update, that's going to take years. I'm talking like 2025 to 2026. So when I then translate that into your portfolio, since the stock market part would recover quicker than the bond market, what's that all translate? One never knows for sure, but I anticipate middle of 24 to end of 24, that if you rewind time back to say January 1 of 22, that we're fully recovered at that stage minus whatever you've withdrawn from the portfolio. So again, just from a compliance standpoint, these aren't guarantees. These are my research perspective, but I believe that that's very realistic. If you take a look at S&P earnings, so we're really focusing on the stock market piece, about 20% of the companies have reported, so very, very early. The economics consensus is that earnings, revenue, that kind of stuff will be down about 7% from last quarter. As of today, it's down more like 8%. If you sort of unravel the data, one large pharma company has done an acquisition. It's debated as to whether or not some of the things that didn't get written off should be blah, blah, blah. If you remove that, earnings are down only 6%. And then if you take energy out on top of that, we're flat. So a couple real big skid, pharma, energy, rest of it's sort of to be determined. When I then sort of factored into what are we really looking at, fundamentally, the stock market has recovered, has bounced up really quickly. It's due for what I would classify as a consolidation. Consolidation can go one of two ways. It goes sideways, or it reverts, loses some steam, goes back 5 to 10% before it sort of takes off on the next leg of the journey. That's one of those two things. People will always voice opinions of why they think that's going to happen. With electronic trading, I would say that I don't really have a strong opinion. I hope for consolidation because my money's invested with yours. But the other thing I would say is the bond market. Interest rates have been really, really jagged. I expect that trend to continue for a while. The inflation news has been better than expected, but not great. And employment news has been better than expected, but not great. So Fed still has some room to work. This week, we're sitting, as I do the video, on a Tuesday. There's a ton of news coming out this week relative to the Fed and all the stuff around it. So to be determined on some of that type of stuff. So not really anything else to comment on. The economy is doing exactly what we expected. It's having a soft landing. Whether or not it continues to happen that way, it's our expectation that that would occur. You heard me say before that we're in a slowdown. Probably doesn't even really register as a recession. I would reiterate that point. So nothing new. Have a great rest of your summer. Thank you very much for the trust that you place in my team. Very important to us. If there's something you need, simply reach out to anyone on our team to get something scheduled. We can talk. Have a great day. Signing off from St. Louis. Thank you.